So, sharp FS Hub, BTC saw a strong push in price in preparation for the current change in political dynamics of the United States of America. So, we have a break of structure from December 4th, where price created demand floor and sold out with a very strong rejection. This becomes an important price action zone for me. It's an important price action because I'm interested in the rally, the beginning of the rally and the end of the rally. I'm interested in this rally and interested in this rally. So this is all we want to see when we come into a chart. We look at major rallies, we look at major price action and see if we can spot break of structure. If there is none, then the market is not set for trading. So we have a break of structure at this level. After price hits this supply roof, price rejected, then broke the structure and retested. So the two structures are now making an ascending trend line. We have here as a supply roof and we have here as a demand floor. So we are going to hold it responsible for retest in the future. And when price returns, it will give us a sniper entry. And lo and behold, Bitcoin came to that chart. I didn't want to share this chart, but let's share it because we already took that sell. We already took that sell and we are off. And I will also show you where the market will finally start reversing. It will continue to drop. It will continue to drop. BTC and gold follow price action of the market. In fact, BTC is more accurate than every other cryptocurrency, and this is why we start focusing on BTC charts. Now, the next thing we want to look at is on this heavy rally we had, where did we have a major demand? That is a stoppage of the bearish onslaught, the falling knife. Where did the body of the candle close? Yes, we understand weak rejection. Look at the weak rejection here, but we are more interested in the body of the candle. That is the support or the demand level that has a strong impact on the bearish fall. So we are also interested about this in the future. And you can see what happened. This level also hit price, but market pierced through it. So we will not want to go back to this level, but let's focus on the current price action that will give us what we want. This level have held price actively and the market pierced through it. And the reason market pierced through it, we also got it in our chart strategy, how we're able to catch a falling knife. To catch a falling knife requires a whole lot of precision and strategy. So at this level now, we have here as a demand floor, we have here a breaker structure, and we have here as a supply roof, and markets now set up a structure for us to trade. We have here as a demand floor, we have here as a supply roof, and we have here a breaker structure and a possible retest, and we have here as a supply roof. So I want price to return into this roof for a potential upswing. So this becomes an important price action in this rally. So what does this mean? That the window is open. So we watch it and see what price does when it return to that level. Will she break it? Will she respect it? We don't care what price does. What is important is doing the right thing. We do not care what price is going to do. We really do not care. What we want to do is just to do the right thing. So if you respect the structure, then that will be break of structure. Then we wait for retest and we sell. So this is the structure. So the two structure holding this ascending trend line is here as a demand floor. Break of a demand floor becomes a supply roof. Break of a supply roof return here as a demand floor. Break of a demand floor returns here as a supply roof. Supply roof, supply roof, supply roof. Break of a supply roof will return here as a demand floor. So it becomes a psychological point, a psychological trend line of 4 hours. This chart is 4 hours chart. So I want to see these guys come back here. Let's see what they will do. Let's see how they will play that structure. We want to see it because on technical, it's invading something. It's invading something. Now, if we apply our strategy, now this becomes a new buy floor, and this new buy floor will complete each cycle at this level, indicating 113,353. If we are going by the weeks, if we are going by the body of the candle, which will be more likely that the body of the candle will first react before the week, then we're looking at 112,000. This is the zone where the market has returned to when you look at the structure. The last time price came to this zone, it bought and create 108. And if price returns here and affirm this level, it becomes a strong demand floor. A previous supply route becomes a demand floor and a psychological line. So on that note, buyers have right to move price. They have a right to move price up to this level to complete this cycle. You can see what they have done here. So we approach market structure on different strategies. So for me, I think the week will be the end of the rally. Let's be very honest. The week will be the end of the rally. So if there is liquidity, but what I see here is that BTC is overpriced. That's the problem. The same thing with gold. It's overpriced. How many people can afford one BTC? How many can own up to 10? So it's high. So I see institutional take profit, and the institutional take profit, the signs are there. So let's also watch that in case price returns on a take profit journey, please let us pay critical attention to this structure. This is the structure that will give you take profit. So a breakout from this structure on 4 hours break and close, it must be 4 hours break and close. It must be break and close. Forget about the weeks. We are not interested in the weeks. We want the body of a candle. Now I want to see how 4 hours candle close. If 4 hours candles close below this line, to be honest with you, it's a sell. It cannot buy again. There is no way it will buy. There is no way it will buy. Because what that means is that the sell order block is higher than the buy order block. So if sellers are more than buyers, what will happen? Everybody will continue to sell. So you don't want to lose money. You don't want to lose money. So at this rate, if price holds here, it means that the buyers are waiting at this level, hoping to trigger the buy clause so that they will return price in line with the price action. The market is bullish. In fact, I was anticipating a further drop. But when I look back into the structure of the buy, and I didn't feel good because I didn't post that buy because I didn't check it. But when I looked it up in my line chart strategy, I found out that the buy was due. So what we see is a potential continued fall until we see what price will do at this level. We had a previous post and this is a correction to that post. In our last post, there was a little mistake to the buy zone. So I'm correcting it. After looking at the structure critically, let's see what price will do at 103, 935. Let's see what price will do at that level. And I need to take this off. We want to see how price close. We want to see price close either below or above. If price close below this demand floor, it will become a supply rule. And I will tell you that from tomorrow, next tomorrow, the market will continue to drop. The market is overpriced. So this could just be what people call fake out. So this one you see here will be considered as a fake out. Yeah, but it's not really a fake out because you see it's a retest to a broken structure. It's a retest to this broken structure where price has formed head and shoulder. This is a shoulder, this is a head, this is a shoulder. Break of structure, no retest. Price came here for a test. So there is a very high probability that this is a retest to this structure. And if it's a retest to this structure, it will give you a 9. You're going to get 9 here, F9. That is what you get here, F9. If it's true, if this is true, that is what you get, 9. So we watch it and see how it closes. If it closes below this line, then what you have here is an F9. That's what this place will give. To give a 9. That's what it will give. That's what it will give. So we'll watch it and see how it closes. If the 4 hours candle, if the 4 hours candle continue to respect this structure and does not invalidate it, then it's fine. Then the market is in a buy zone. Then you're looking for a six, the market will go up. If you close below this line, it's a sell. The reason is because market sell where others are selling. It's just like you have a product and there's a particular market that is buying your product. Where will you take that product to? You take it to the market where other people are selling their own. You see, they came here, they sold. Those people say, ah, these people are selling. They came here, they sold. You can see the way they are selling. Nine, nine. They return here again and sold. They give another nine. Now here, market sometimes try to make an extension by pulling out from a supply route. Pulling out from a supply route means that sellers are looking for a higher zone. It means that they cannot continue to sell at discount. They want to push price to a very new high before they can now sell. The same sellers are the buyers now. They don't want to sell yet. They want to lure people into a higher value. When they lure people into a higher value, then they will sell from the top. That is what it means. So if you have this pull out from this structure, then we want to see if the market breaks below its 4 hours candle, then we now know that they want to sell where others are selling. They want to sell where others are selling. And if that happens, it will give a 9. You see a very good 9 here. You see a good 9. Give you a 9 here. I hate it. Anytime you see this kind of structure, I call it 999. And anytime you see upswing, it's a 6. So we keep bringing these funny things to make it harmful. There is nothing serious about it. It's just for educational purpose. So go use it, apply it to whatever strategy. Shabby FSO, we don't use any form of indicator. Today we closed 6 trade, 6 win. 6 trade, 6 win. And then we just close on BTC win, sell, BTC sell on ATP. We just close, and I decided to just close it because this is very volatile. And I was banking on my last analysis. I wasn't too sure until I now had to do a new analysis on that, and I realized that this pair will continue to drop until up to 103. So the reason I'm doing this is to correct my last post. In the last post, I made a mistake in the sell in the buy zone. We hurriedly closed the sell structure. We left that market in ATP because I also see that the market has already broken structure. So a break of structure at any time, liquidity is already very much available. So you can upswing and take your sell your sell profits. So the best is to close it and walk home with the little you have than to stay there and lose everything. So this is what we see. So now the market has already created a structure for us to leverage on. So let us hope that this thing is trying to do is something that is useful. You can see price rejecting the black ascending trend line. After price creating here supply roof, it broke the supply roof, used as a demand floor, returned respect the demand floor, break it as a supply roof, and came back to respect it. And if this respect is valid, believe it or not, look at this week at this level. At this level where we have this week, look at the value of that 9 and the way it ended with a strong week that closed at this level. So what that technically means is that you could be having price return to this level. So we do not want price to break below this level. A break below this level, we go for a retest and confirm that this is a sell zone. Now they want to sell where others are selling. That is the problem. They want to sell, market sell where others are selling, buy where others are buying. The question is at what angle are they buying? At what angle are they selling? This is where the concept of trend angle comes in. You can look at it. A lot of traders do not know why you have trend angle. Every trend has an angle. And market is dynamic. It doesn't follow one pattern. It can change. It can change at any time. So every time it changes, you recalibrate. Every time it changes, you recalibrate. The idea is to find out that you have a clean structure. If the structure is not clean, forget about it. It's not important. So we are privileged to focus on clean structure. And from next week, we will introduce a one line rule. One line rule is at the end of the day, we live with only one line because market will react only on one line. Buying and selling happens at one point. You buy from one point. Now the question is, are you buying on a final takeoff? Are you selling on a final takeoff? Because you could buy in a market that is indecisive. He hasn't made up his mind to buy. So it can drop 6 times before final buy. Or you want to sell. You're selling in a roof that has not made up its mind to sell. How do you know where to stay so that you will be in the final sell leg. If you're not in the final sell leg, you will have the fair gain. So this is what we see, and we use a very orthodox strategy, and this is how we choose to remain orthodox in the market.